Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 31st, 2025, and we're diving into AGCO's latest earnings report for the third quarter. AGCO, a global leader in agricultural machinery and precision ag technology, has just released its financial results. Joining us today is John, senior analyst from Smart Stock Watch. John, thank you for being here.
Thank you for having me. It's a pleasure to be here to discuss AGCO's performance and what it means for investors.
Revenue and profitability overview. Let's start with the top line. AGCO reported net sales of $2.5 billion for the third quarter, which is a 4.7% decrease compared to the same period last year. Despite the decline in sales, the company reported an adjusted earnings per share of $1.35. John, can you elaborate on these figures?
Absolutely. The decrease in net sales is primarily due to the absence of revenue from the divested grain and protein business, which contributed significantly in the previous year. However, AGCO's adjusted EPS of $1.35 exceeded the analysts' forecast of $1.26, indicating strong operational performance despite the sales decline. The reported EPS of $0.49 includes gains from the sale of their ownership interest in TAFE, which significantly boosted net income.
Regional performance and strategic initiatives. AGCO's regional performance varied significantly. The Europe-Middle East region saw a 27.5% increase in sales, while North America experienced a 32.1% decline. What factors contributed to these regional differences?
The strong performance in Europe-Middle East is attributed to a recovery in production levels and increased demand for high horsepower and mid-range tractors. In contrast, North America's decline is due to softer industry sales and underproduction of end-market demand, particularly in high horsepower tractors and combines. AGCO's strategic focus on precision agriculture and sustainable technologies is helping to drive demand in regions like Europe, despite global challenges.
Operational efficiencies and future outlook. AGCO has increased its full-year adjusted EPS outlook to approximately $5 and announced a $300 million share repurchase program. How do these strategic moves position the company for the future?
These initiatives reflect AGCO's confidence in its operational efficiencies and cash flow generation. The share repurchase program, funded by proceeds from the TAFE sale, is a strategic move to enhance shareholder value. The company's focus on cost management and restructuring has improved its operating margin to 6.1%, with an adjusted margin of 7.5%. This positions AGCO well to navigate ongoing market challenges and capitalize on growth opportunities in precision agriculture.
CEO insights and market challenges. Eric Hansotia, AGCO's chairman, president, and CEO, highlighted several market challenges, including high interest rates and trade tensions. How is AGCO addressing these issues?
Eric Hansotia emphasized AGCO's strategic investments in precision agriculture and autonomous solutions as key drivers for maintaining demand. The company's diversified global footprint and farmer-first strategy are crucial in mitigating regional disruptions. Despite the challenges, AGCO's focus on innovation and restructuring initiatives is helping to sustain its competitive edge and drive long-term growth.